What is your biggest financial concern? Are you being as intentional with your finances as you could be? How confident are you that you'll reach your financial goals? How will life's transitions impact your financial plan? Welcome to the Clarity and Confidence for Life podcast with Tom Fleishel, founder, president, and CEO of Fleishel Financial Associates. Discover how we can help business owners, successful families, and corporate executives achieve clarity and confidence for life while providing tailored financial solutions that eliminate complexity and free you up to focus on what really matters in life to you and your family. Now, on to the show.
Hello and welcome to the Clarity and Confidence for Life podcast with your host, Tom Fleishel, where we help you get clear about your goals so you have confidence moving forward. I'm Wendy McConnell. Hi, Tom. How are you today?
Great. Thank you very much. How are you?
I'm good. So we're going to be talking a little bit about discussing your finances with your spouse.
Absolutely. This is a topic that everybody struggles with, I think, and I just thought it was a very good subject matter for us to dive into to maybe help people that have struggled a little bit with, I just don't want to talk to my wife about or my husband about these issues, and we just avoid it, and so let's hopefully move past that.
Yeah, money is one of those things that even people who are married seem to not really want to discuss it, and it's so important, right?
Exactly.
What's the first thing that we need to do then to start this conversation?
Well, I think it's the first way I'd like to think it start out is just to agree together that money should be discussed. When my wife and I had our premarital counseling with our pastor, he gave some great advice. He said, if you can both openly discuss money and sex, you'll avoid a lot of misunderstandings and possible conflicts.
Oh, yes, that's true.
I think you need to recognize that everyone has had different experiences and upbringing about money and finances. So I think it's a good idea to start by sharing with each other, some of the lessons or messages about money you each learned growing up. My wife, her dad was an accountant, so she learned the value of a sale and how to find bargains. She learned how to balance a checkbook, how to manage credit, how to keep debt to a minimum. They came from a very solid middle-class family in suburban Atlanta, but my experience was very different. Growing up in a small community, both parents were in low-wage positions, and money was always kind of a challenge in our family situation. We couldn't even afford to go on vacations. It was never really discussed, and I learned Zippo about personal finance. So my dad did help me go to the bank and get a loan for my first car, but that's about all I recall about any money discussions.
And it comes from either you grow up with this sense of abundance or lack when it comes to money. And it sounds like you guys had opposite experiences.
Yeah, and so when you come up with such different backgrounds, it can really be an issue if you don't really try to come together and talk about these things. And another idea is maybe you can discuss some good and bad decisions that you both made. I really shouldn't have bought that car and paid all that money for that. It was way over my head in debt. There's just some good decisions that people and bad that people need to make sure that they, bring up. And I think that helps too.
Yeah. And you hope that the other person made some similar mistakes or something on the same level.
Exactly.
Okay. What if, though, people are just really, really far apart and they can't understand the other's point of view?
There's a lot of issues that I think if you can start an open dialogue about several important matters, I think this will be a great start. So the first one might be, how much should we be putting in savings and cash reserve or investing? So wisdom and experience suggests that families have at least 4 to 6 months of expenses in cash reserve. So, you can set up an auto deposit in the savings each month and make that a seamless process. But I think it's important that you pay yourself first and put aside money into savings instead of spending first and, we don't have anything left over for saving. So that's kind of setting a priority for that as far as that goes.
Okay. So what would the next thing be?
Well, another one would be, how much should we invest? Of course, once you've set up your savings and put that aside and you got that built up, now you can start setting aside money for investing into IRAs, your 401ks, those types of things. So again, both come to terms and agree on how much we think is appropriate and how much can we really put away for that. think that's a serious discussion. Another one is who handles the bills and expenses. So that's a biggie because we've encountered a common situation where one spouse is just really driving all the financial decisions, paying the bills, managing the money, while the other is really totally checked out and just kind of along for the ride. So for various reasons, they've decided to completely tap out of any involvement in the family's financial affairs. So we've seen families where one spouse handles all the financial matters, while the other really just intentionally or by default has been unwilling to wade into those details. So they either feel they would be treading on the other's toes or just have an ostrich head in the sand avoidance attitude. So the reasons vary, but regardless, it's not the wisest approach. So why should one partner be setting all the goals without the other's input? Should not both spouses get on board with how they want their future lives to look with their finances?
Mm-hmm.
It's okay, I think, if one takes the lead role in managing those day-to-day finances, but both spouses should be informed and communicating regularly, I think, on the priorities and the status of their financial, well-being.
It's one of those things where usually somebody gets the job of handling the bill paying and by default, because nobody really wants to do that because it's kind of a taxing job. So then the person who doesn't do it just doesn't stay as up to date with what's really happening with the bank account.
Yeah. I mean, you don't want to be in the dark and completely aloof. Lord forbid, things happen. So, what if, sometimes one could just no longer fulfill that role, say from health concerns, what if a divorce occurs, premature death? Do you know where all of the accounts are located and their logins and passwords?
Yeah.
For our entire 25-year marriage, my wife and I have followed the plan. I kind of make the money through the business. She pays the bills for the business and home and all the other thousands of things she coordinates for our family. But we need to be meeting at least quarterly to make sure all those accounts and logins are kept up to date, what accounts are auto pay, and I know where to find them.
That sounds very, very healthy, Tom.
Yeah.
So what do you think about budgets?
I think it depends on your income, because those with lower incomes may need to really monitor expenses and stretch the dollars more closely. More affluent families may not be so concerned about tracking their actual cash flows every month, but budgets are hard work and tracking expenses can be a challenge, but they've got some really great software out there like Quicken. It can easily automate what you're doing and tracking and code in your expenses. But then it really comes down to the issue. If you're going to follow a budget, it's always kind of an issue that, well, what if we spent way over in eating out? That's the one that everybody kind of blows it, right? Eating out. And so what if we had a $200 a month budget and, we spent $500 eating out this month? Does that mean we need to cut something else in the budget? And are we willing to make that kind of a disciplined decision? And I just think that's really, really takes a lot of discipline. And most people aren't going to follow something to that regimented, situation.
Mm-hmm.
But, budgets are, I think, important. And if it's in the right situation, just trying to keep it as a guide.
What about when it comes to like spending money? If somebody is working at an office, they want to go out to lunch every day, like that kind of stuff.
Yeah. Yeah. I mean, you just have to factor it into the budget and make sure that everybody's on board with it and something reasonable. Do you always have to go out to eat, or can you bring something, from home once in a while? It just depends on, what your priorities are. A lot of people have very strict diets and, so those are important things they have to follow.
Should there be some sort of agreement on how much that we can spend without actually talking to the other one?
Yeah, that's a big one, because what happens if you find out that somebody went out and bought a very expensive whatever? I just bought a huge, maybe it was something like a new purse or a $500 dress, or the guy went out and bought a new shotgun without consulting his wife, so those kind of things. I think it's important. So come to agreement with, okay, if we can say anybody that spends more than $1,000, we need to both talk about it, something like that. And not just say, okay, whatever you do, that's fine. I think that can leave it open to a lot of arguments and disagreements if you guys don't come to agreement on how much we can spend without approval from the other.
Yeah. So I can spend $950 any way I want, but if I get to 1,000, then I have to talk to you.
Well, I'm just saying that's one.
I know.
Yeah.
I like
You
that.
definitely need to both come to terms with that and agree to it. Because I just, that's where I think problems fall. It's really going to be something that people can really go into a stressful disagreement. And why did you spend that? We didn't talk about this. And now we're in debt because you've got this new thing you bought.
Yeah.
Yeah.
What about the financial advisor? Should you both be talking to the financial advisor?
Well, this is another issue that we kind of run into when we have clients come in and it's either the wife or the husband. Well, they don't really care about this stuff. I'm just here to represent us both. Not so good, because we're making very important decisions about your future, about how your money's invested, about your goals, about your risk. I think both spouses need to have input. They both need to be involved in these decisions, to talk about their things like investment objectives, risk factors, income needs. Both should be aware of the insurance coverages that are out there and in place. Who are the named beneficiaries? Each spouse should be involved in decisions like who will act as our power of attorney. And something happens to one spouse, if the other one's not available, who would be a backup power of attorney, for example, or a personal representative? Who would be our backup healthcare surrogate in case I have a health emergency, go to the hospital, and the spouse is not available? Who is a backup healthcare surrogate to, authorize a procedure to be done if I'm unconscious? Those are all very, very important issues that people just don't really think about. And so when we sit down, we try to make sure that we kind of address all those issues, and clients are aware. And it's almost like if somebody comes in by themselves, I say, let's reschedule, because we want both spouses to be involved. And even if they're not really interested that much, they at least need to be aware and have a part of this conversation.
Mm-hmm. Right now, Americans are in more credit card debt than they've ever been. Is this something that we should definitely talk about?
Absolutely. Debt's a biggie. So one of the quick questions is, what kind of debt to income ratio, they call it the DTI ratio, are you willing to take on? So that DTI measures all your monthly debt payments divided by your gross monthly income. So that's really the number that's lenders use to measure your ability to manage the monthly payments to repay the money you plan to borrow. So for example, when it comes to home mortgages, auto loans, credit cards, it's best to agree on a debt to income ratio that positively impacts your credit ratings. You want to be 750, even 800 to really get good credit. So at 35% or less debt to income ratio, you're looking good. That's pretty much a standard that most lenders want to look for. And they're thinking that your debt is at a manageable level. You most likely have money left over for saving or spending, after you've paid all the bills. Lenders generally view a lower DTI as favorable, of course.
What about when we're talking about getting new cars and stuff? Say, I'm on my way home from the store or something. I just happened to drop into the dealership because I saw a car out front that I liked. Would it be a bad idea to just go, you know what? They offered me a great deal. I'm just going to get in this car and go.
Yeah, that's a tricky one too. My wife jokes about that when it's her turn to buy a car, she has to do a spreadsheet and look at all the different cars. When I go to a dealership, I have an impulse buy.
Yes.
It's not a fair deal, but yeah, we both definitely agreed at the time that it was appropriate. But yeah, you definitely do not want one going out by themselves and just signing up for a loan and not making sure the other one's aware of that. Boy, that could be fraught with a lot of stress and disagreements. So any big, major purchase, your house, your financing, cars, helping kids. Another big one is, well, how much do we help the kids? We've got a 23-year-old and a 21-year-old. They're still learning about financial matters and debt. And so one of them has kind of got themselves into a little bit of a pickle, not currently employed, still spending money, credit cards going up. Do we bail them out, or do we let them learn a hard lesson? I think we're going to lean on, they just got to learn some lessons, and it's going to cost them. But if we keep bailing them out every time there's a problem, when are they ever going to learn? Nobody bailed me out when I made bad mistakes. Nobody was there to stroke the carte blanche check for me.
Yeah.
So that's I think something about family matters. That's another discussion about, what do we do to help out our kids financially? There's nothing wrong with giving them a good start, helping them buy their first home, helping them buy a new business. That was the case. But I think, opening the door to just, well, here's anytime you need money, just come to us. I've seen all kinds of problems with that.
Yeah. We're talking about credit cards. When we do have credit cards, should we have our own separate credit cards, or do we use like the same account, do you think?
Well, it depends on the relationship and the couple. I mean, some folks just, come from two different, separate marriages, the second marriages. So they want to keep things more private and separate. If that works for them. I just, again, believe you're opening up some landmines that could, blow up some trust in the relationship if one's running up debt on the other. And you are a couple, and a leveraged debt situation is going to affect the other. I definitely think this is a very important conversation. My wife and I have 2 copies of the same credit card, so there's no secrets potentially lurking out there for expenses. Unfortunately, it does make it a little challenging to surprise her with a birthday or Christmas gift, because she sees right away, as soon as something hits that credit card, she's on top of it, so a little creativity is needed. But that's just, I'm sure, if you agree and people can get a separate card, maybe I think, again, it's just a situation with each family and what they need to do.
Tom, I have the same issue with my husband complaining about not being able to surprise me. So I agree in the month of December to not look until after we exchange gifts.
Oh, there you go. That's a good strategy. Just don't open that and don't look.
Just don't look. It'll wait.
Yeah.
So how do 2 people come together then on what their idea of an ideal retirement looks like?
I want to go back up to one thing first, though. I want to talk about this whole idea of the investment accounts before I get into that retirement thing.
Sure.
Most people are going to have a separate 401k, Roth, and traditional IRA accounts. And that's very good because everybody needs to have those. There may be reasons to keep separate non-retirement accounts, like inherited investment. Sometimes we have clients that inherited money and they want to keep it separate. We understand that. But second marriages with prenups can often necessitate, maintaining single ownership, record keeping. And then there's trust registrations are appropriate for estate planning purposes. And there's sometimes you have separate trust registrations or a joint trust. Most commonly, though, people are setting up joint accounts, either registered in what we call joint tenants by entirety or joint tenants with right of survivorship, typical registrations for setting up investment accounts. So back to the idea of what retirement looks like. I think it's very important that sitting down and setting goals together, this is what we do with our clients to, first off, well, what kind of lifestyle are we both accustomed to living now? And, 50% of that at retirement is not going to cut it. And most people kind of seem to think, well, we won't have a mortgage. We won't have all these other expenses. You're going to want to travel, though. You're going to want to go spend time with the grandkids. You're going to want to do this, going to go on those cruises. You're going to want to buy a new car once in a while. All those things, I think, need to be factored in as you really get a better reality grip on what our retirement looks like. So it starts with defining retirement goals together. Can you agree on what amount of income we really want to have from all the sources? So the question is not necessarily what will we have from Social Security, pensions, or retirement account distributions, but what do we really want? Not just what we think we can get. So having your financial advisor run projections on inflation, your longevity, estimates, your goals, and conservative rates of return can help really determine the feasibility of your goals. So it's really a matter of getting some good clarity about specific financial goals. So for example, okay, when Bill is 65 and Betty is 62, we want to be able to have $10,000 a month in net retirement income. Or we want to have a travel budget of $15,000 a year and spend that and keep that going up with inflation. Oh, we need to buy a new car in 3 years, and we want to do a kitchen remodel that's going to be, we thought was going to only be $75,000. Now it's going to be $125,000.
That's always the case, Tom.
Yeah. So all those goals we get real specific with, and then try to say, okay, factor all those in. what are the odds of us achieving those goals? And that's where all the number crunching comes in, and estimates on rates of return and all the factors that go into computing, what are the realistic odds of us achieving these goals, and regularly updating that, on a regular basis, so that markets change, tax laws change, our goals might change. So it's not just to set it and forget it. It's an ongoing process of updating our goals, updating the numbers, and keeping on track with all of that. But, when all those things we just discussed, if you can really have some open dialogue and be honest with each other, I really think it's going to avoid a lot of potential conflict and stress in a relationship. So that's why I just feel so strongly, because I've just seen too many situations where that's not really happening. And there's no reason. If you would just really be open with each other and honest, I think it can avoid a lot of problems.
And you have to really understand what your partner wants when it comes to retirement. Because some people think, oh, we're just going to travel the whole time. And the other one's thinking, I'm just going to go golfing the whole time.
Exactly. Or, oh, I thought we were going to buy that RV and go travel the country, and no, that's not at all what I'd be interested in doing. And again, my wife and I jokingly, she says, Tom, I married you for better or for worse, but not for lunch. So if I'm underfoot at home after retirement, that might be a problem.
Oh, boy. So you better get busy.
That's right.
Oh, Tom, thank you so much. Now, if somebody has more questions for you, how do they get in touch with you?
Well, the first way, they could get on our website at fleishelfinancial.com, or they can call our number at 386-738-1800.
And thank you for joining us today. Please like, follow, and share this podcast with your friends. Until next time, I'm Wendy McConnell.
Thank you for listening to the Clarity and Confidence for Life podcast. Click the subscribe button to be notified of new episodes when they become available. The information covered and posted represents the views and opinions of the hosts and/or guests, and does not necessarily represent the views or opinions of Raymond James. This content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional financial advice. Always seek the advice of your financial advisor or other qualified financial service providers with any questions you may have regarding your individual situation. Securities are offered through Raymond James Financial Services Incorporated, member FINRA, and SIPC. Investment advisory services offered through Raymond James Financial Services Advisors Incorporated. Fleishel Financial Associates is not a broker-dealer and is independent of Raymond James Financial Services.